Welcome to today's market report. European stock markets are set to open lower on Friday, with investors looking for more fiscal stimulus amid worries the global economic recovery might fade as coronavirus cases increase. At 7 o'clock London time this morning, the DAX futures contract in Germany traded 0.8% lower. CAC 40 futures in France were down 0.3%, while the FTSE 100 futures contract in the UK fell 0.4%. Finance ministers from the euro area met virtually on Thursday, resulting in Ireland's Finance Minister Patrick Donohoe being elected as the Europe's new chair. However, there has been disappointment that little fresh emerged about the proposed €750 billion recovery fund for economies hit hardest by COVID-19. The markets will now have to wait for the get-together of the European Union leaders on July 17th to 18th. For any further news about the fund, potentially a groundbreaking program funded by joint debt, there remain fundamental disagreements over key aspects, meaning the plan could still be watered down or fail. The European Central Bank is also scheduled to meet next week, but little new is expected after the June meeting increased the size of its pandemic emergency purchasing program. They have deserved it after all the excitement since March. Next week's meeting should give ECB some time to reflect and take stock. It will not be the moment to decide on any new action, says analysts at ING. Meanwhile, worries are mounting that the resurgence in coronavirus cases, particularly in the US, could derail an economic recovery. There were more than 60,500 new COVID-19 infections reported across the United States on Thursday, the second straight day that new cases have topped the 60,000. Earlier this week, the European Commission stressed that the Eurozone economy is still on course for its biggest contraction ever, down 8.7% this year, a forecast predicted on the assumption that there wasn't a second wave of infections causing more lockdowns. Oil prices weakened on Friday, heading for a weekly decline after the steep losses seen during the previous session, amid worries that a nascent economic recovery in the US and elsewhere is being quashed as COVID-19 infections rise and cities shut back down. Oil inventories also remain bloated, with the US crude oil stocks rising by nearly 6 million barrels last week. This morning, US crude futures traded 1.6% lower at $39 a barrel, on track for a weekly loss of around 3%. The international benchmark Brent contract fell 1.3% to $41.81 per barrel, set to drop around 2%. Gold futures fell 0.2% to $1,801.15 per ounce. On the FX front, following a steady decline in the overnight trade, GBP/USD looks to extend the downside consolidative mode below 126 in early Europe and remains vulnerable amid broad risk aversion. The persistent surge in coronavirus cases in the US, concerns over the global economic rebound, and Brexit uncertainty exert bearish pressure on the spot. Further, the Telegraph reports that Sharma, the UK Business Secretary, walked away from the European Union's coronavirus vaccine scheme, adds to the downside in the pound. The UK turned down the offer after failing to secure sufficient assurance that the kingdom would receive the number of vaccines it needs on time. The cable reverses the recent surge led by the UK fiscal stimulus announcement. On Wednesday, Chancellor of Exchequer Rishi Sunak laid out a detailed program including a job retention scheme and other means of boosting the economy. In the day ahead, the risk of market mood could likely continue to benefit the safe haven US dollar and keep the major undermined. Traders will also watch out fresh Brexit headlines and US PPI data for fresh trading impetus. According to Commerzbank, the cable was capped by the 126.30 to 93 resistance. and the pair trades at 125.85, down minus 0.18% on a day, though is unlikely to retest the 125.43 support. The single currency has become under renewed selling pressure in the last couple of days, forcing euro-dollar to recede from multi-week tops around 113.70 to Friday's low near 112.50. Euro-dollar is down for the second session in a row at the end of this week, facing increasing downside pressure in response to the better tone surrounding the greenback. In fact, the risk-aversion sentiment re-emerged among traders in past sessions as market participants keep reassessing the ongoing reopening of economies around the world. This is today's market news. Thanks for listening. We'll see you next time.